Welcome back to World Strategy, the channel where we break down the biggest stories in global finance, economics, business, and geopolitics. Today, we're diving into one of the most important questions facing investors around the world. Are AI stocks becoming the biggest bubble since the dot-com era? Stay with us until the end, because what happens next in the AI revolution could shape the future of the global stock market for years to come. Imagine waking up tomorrow and discovering that some of the world's biggest technology companies have lost hundreds of billions of dollars in value overnight. It sounds impossible, but history shows that when investors become too excited about a new technology, markets can enter dangerous territory. Today, many experts are asking the same question. Are AI stocks becoming the biggest bubble since the dot-com era? Artificial intelligence has become the hottest investment trend on the planet. Companies are spending hundreds of billions of dollars to build AI systems, data centers, and advanced chips. Investors are pouring money into anything connected to AI, pushing stock prices to record highs. Some companies have seen their valuations explode in just a few years. At the center of this revolution is Nvidia. Once known mainly by gamers, Nvidia has transformed into one of the most valuable companies in history. Its powerful AI chips have become the backbone of the artificial intelligence boom. Every major technology company wants them. Microsoft wants them, Google wants them, Amazon wants them, Meta wants them. As demand skyrocketed, Nvidia's revenue and profits surged, pushing the company's market value into the trillions of dollars. But Nvidia isn't the only winner. Microsoft has invested heavily in AI technologies, Google is integrating AI into search and cloud services, and Meta is spending enormous amounts developing AI systems and virtual assistants. Across Wall Street, AI has become the dominant story driving stock prices higher, and that's where concerns begin. Throughout history, every major market bubble started with a genuine breakthrough. The railroad boom changed transportation, the internet transformed communication, the housing market reshaped finance, and now artificial intelligence is changing nearly every industry. The problem isn't the technology itself. The problem is what investors do when they become overly optimistic. When people believe prices can only go up, risk often gets ignored. That's exactly what happened during the dot-com bubble of the late 1990s. Back then, investors believed the internet would change everything, and they were right. The internet did change everything. However, many internet companies had little revenue and almost no profits. Their stock prices became disconnected from reality. Investors continued buying because they feared missing out. Eventually, the bubble burst. The Nasdaq index lost nearly 80% of its value, trillions of dollars disappeared from the market, and many companies never recovered. Today, some analysts see similarities. AI companies are attracting enormous investor attention. Valuations continue climbing, expectations are extremely high, and every earnings report is scrutinized for signs that AI growth remains strong. However, there is one important difference. Unlike many companies during the dot-com era, today's tech giants are already profitable. Companies such as Microsoft, Nvidia, Alphabet, and Amazon generate billions of dollars in annual earnings. This makes the situation far more complicated. Some experts argue that AI isn't a bubble at all. They believe we're witnessing the early stages of a technological revolution that could reshape the global economy for decades. Others are more cautious. They warn that expectations may have become unrealistic. Many investors assume AI spending will continue growing indefinitely, but what happens if companies start reducing their AI budgets? What happens if the technology develops more slowly than expected? And what happens if profits fail to justify current stock prices? Even a small disappointment could trigger a major market correction. Another risk comes from interest rates. For years, low interest rates helped push stock prices higher because investors were willing to pay more for future growth when borrowing money was cheap. But higher interest rates change the equation. When rates rise, future profits become less valuable in today's dollars, placing pressure on growth stocks, especially those trading at extremely high valuations. That's why investors closely monitor central bank decisions. One unexpected policy move could send shockwaves through financial markets. Then there's competition. Right now, many companies are racing to dominate the AI industry. Billions are being spent on research, infrastructure, and talent. Not every company will succeed. History shows that technological revolutions create both winners and losers. Some businesses become giants, while others disappear completely. The challenge for investors is identifying which companies will lead the future and which ones are benefiting mainly from hype. Wall Street understands this uncertainty. That's why market volatility has increased whenever investors receive new information about AI spending, earnings growth, or economic conditions. The future of the stock market may depend heavily on whether AI can deliver on its enormous promises. If artificial intelligence dramatically improves productivity, creates new industries, and boosts corporate profits, today's valuations may eventually look reasonable. But if expectations become too extreme, investors could face a painful reality check. So, are we in a bubble? The honest answer is that nobody knows for certain. Artificial intelligence is a real technological breakthrough. The opportunities are enormous, but the risks are equally significant. What we do know is that history rewards investors who remain disciplined during periods of excitement. When everyone is chasing the same trend, emotions often replace logic, and that's usually when markets become most dangerous. Whether AI becomes the greatest investment opportunity of the decade or the next major stock market bubble, one thing is clear. The decisions being made today will shape the future of global markets for years to come. Investors around the world are watching every move, and the outcome could redefine the global economy. If you enjoyed this analysis, don't forget to like the video, subscribe to World Strategy, and turn on notifications so you never miss our latest insights on global finance, investing, economics, and geopolitics. Thanks for watching, and we'll see you in the next video.